Hello and welcome to the look ahead for Friday, the 7th of February with me, Fiona Cincotta, Senior Market Analyst at City Index. So in the European session, we've got German industrial production. We've also got Bank of England Chief Economist Hugh Pill will be speaking. And then over in the US session, we've got Canadian employment data and, of course, the US non-farm payroll. So a lot of focus will be on the US non-farm payroll. Obviously, the markets will be looking to see whether we have another outstanding performance from the US labor market. Last week in the December meeting, we saw 256,000 jobs added. This time around, expecting 169,000, so slightly lower. We're expecting wage increases to be 0.3% month on month and unemployment to hold steady at 4.1%. But actually, if we have a look at the leading indicators for this week, they have pointed to a potentially an upside surprise. We've seen the ADP private payroll has come in stronger than expected. We've also seen an increase in the employment subcomponents of both the ISM, manufacturing and services PMI. So that's a reason to be thinking we may see a little bit of a move to the upside. Obviously, a stronger jobs report is just going to reinforce that view that the Federal Reserve is in no rush to do anything as far as cutting rates further is concerned. Obviously, if they have strong data from the US continuing to come through, particularly given that inflation is showing signs of being a little bit sticky and also a resilient jobs market, then the Fed will have no reason to be cutting rates. Now, what that means for the market, here we go. We're looking at US dollar, Japanese yen. Interestingly, the sort of focus has very much shifted away from trade tensions and is back onto economic data. We haven't had really much further from following the sort of retaliation from China, which was very measured, and still the pauses on Canada and Mexico. So in that respect, the US dollar is actually trading lower this week. It's given up, sort of moved lower, and this is the US dollar Japanese yen that we're looking at here. We've also not only seen sort of a weakening in the US dollar, we've also seen a strengthening of the yen as sort of rate hike expectations have ramped up following that strong wage data yesterday. We can see that candle there. That was yesterday's strong wage data, which really does support the view that the Bank of Japan could be hiking interest rates again soon. Now, if we just have a look at what this picture looking like technically, obviously, if we do see that stronger than expected non-farm payroll report, will that be enough to stem declines in USD, Japanese yen? Will we see some sort of recovery? I mean, it's interesting, as I said, we've sort of broken out of this falling channel that we've been trading in since the start of January. We're down below the 200 SMA. We're down below the 100 SMA as well. Level on the downside to be watching next would be 150.75. That's the 50% retracement from the 162 high, 139.50 low. But on the upside, if we do see a recovery, the level here is going to be pretty important, around the 150.275 level. That's the 200 SMA. It's also where we've got the 100 SMA, the falling lower band of the falling channel. So if we can get a rise above there, then that will naturally bring 153.40 back into focus. Just sort of whilst we stick with central banks and data, let's just have a look at what's going on with the pound and how tomorrow's data may impact sterling USD. Obviously, we had the Bank of England interest rate decision today, where the central bank cut interest rates by 25 basis points, in line with expectation, but the vote was a little bit more dovish than was expected, with two policy holders actually voting to cut interest rates by 50 basis points. So following that, it does mean that we've seen interest rate cut expectations ramp up a little bit across the year, now expecting 3 more rate cuts this year. That has had a bit of an impact on sterling US dollar. We did see it try to, it failed at resistance here at the 50 SMA, dropped right back to this trend line. This is the trend line that dates back to 2007, but that seems to have offered support. We're back above the 124.50 level as well. Now that's where we're hovering around. So Buyers, if we do get sort of a strong US jobs data, then we're going to be looking potentially at a more downside in this pair. This is the level to be watching here, 123.70. That's today's low. It's also that falling trend line support. If we're going to break below there, then look towards the 123 level. Buyers, if we get any sense of weakness from the US non-farm payroll report, or we get a slightly more hawkish sounding Hugh Pill, chief economist for the Bank of England, then that may see buyers look to break above that 50 SMA, which has proved to be quite a challenging resistance so far. That's on the upside. 125.20 opens the door up to the 126 level. Then also we let's just take a look at the Nasdaq as far as the data is concerned. Obviously, we have been looking at the there we go, at the Nasdaq in relation to earnings as well, and the trade concerns that they've been out sort of across the week, and the recovery and the fading of those trade concerns has helped push the prices higher. We've also had, as I said, earnings. We haven't had Amazon earnings right after the close, so that's after this has been recorded. But if we do get upbeat numbers from Amazon and we get signs of weakness in the US non-farm payrolls, then that will obviously be supportive for equities. And we can see the Nasdaq heading back up to that 22,100 and record highs. Any sense of a stronger than expected report, which is what we're sort of expecting potentially, could see a retest of the 50 SMA, which is around the 21,380 level. Below there, that could open the door to the 20,750. The price would need to break below that level in order for a lower low to be achieved. And then just finally, we've also got USD. We've also got Canadian jobs data, as I mentioned. Canadian, we're expecting the unemployment figure to tick higher again to 6.8%. Net job change is expected to come in 25,000. And so this is potentially going to be a weaker report than the US report. So in that respect, we may find that this pair actually recovers higher if we get some strength in that US dollar and the weakness in the loonie on the weaker jobs report. So, I mean, after that spike higher on the news, regarding the tariffs, we've seen it come back to this sort of holding pattern that it's been trading in since mid-December. We're finding support on that line at the moment around the 43 level. If we do get that stronger US non-farm payroll, weaker Canadian data, then we could see the price look towards to move back up to that 144.50 level in order to sort of break higher. I mean, and then, well, that's a big spike up there, but looking up for around 146 would be the next logical level if we break above there. Obviously, if for some reason we do get a weaker non-farm payroll, considerably weaker non-farm payroll from the US and stronger data from Canada, then we'll be looking for downside for a break of this level at the 143. That could then open the door to the 142 level on the downside. So that is everything that we have been watching and that we will be watching tomorrow. I hope you've enjoyed this, and I look forward to catching up with you on Monday.